City Council meeting for Monday, December 18, 2017. Please rise for the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you very much. As you recall, this will be our first of two meetings this evening. Our second meeting will begin at 7 p.m. This first meeting will be solely about our financial statements for fiscal year 2017. Barb, would you call the roll, please?
Council members Polika?
Here.
Piana?
Here.
Leaks May?
Here.
Martin?
Here.
Mayor Coulter?
Here, thank you. We have a quorum this evening. The next item of business would be the approval of the agenda.
I make a motion to accept the agenda as presented.
Support.
Moved by Pollock and supported by Piana. Any discussion? Barb?
Piana? Oh. Yeah, Piana.
Yeah.
Yes. Leaks May?
Yes.
Martin?
Yes.
Polika?
Yep.
Mayor Coulter?
Yes, thank you. The agenda is adopted. Moving on now to our one and only agenda item for this meeting, which is the audit presentation. Good evening. Good to see you again.
You too. Here whether you like to or not. Right?
Indeed. We like to.
When the numbers are good.
The numbers are good.
When the numbers are good.
Very good audit. A couple of general comments. Our thanks to Cheryl, April, and the rest of the city staff for their courtesy, cooperation, and assistance. The field work went very well, as usual. What I plan to do is just cover what I think are the highlights, but if you have questions, feel free to stop me at any time. We can go through those. Tonight I've left at your seats a presentation handout as well as a full audit report. I refer to this as the abridged version. This is what I plan to go over tonight, but if you have questions, we can go through the audit, the full audit report if you'd like. Most people usually don't like to do that, but we can if you want. So with that, I am Aaron Stevens. I'm with Stevens, Grinovic, and Tucker. I've been here a few times. The independent auditor's report, this is on pages Roman numeral 1 through 3 of the bound copy, but it's on pages 1, 2, and 3 of the presentation handout. And I always like to start my presentations with the purpose of an audit is to express opinions on the financial statements. The purpose of an audit is not to detect fraud or give you an opinion on your internal controls. Fraud detection, deterrence, and prevention, as well as sound internal control, is management's responsibility. Management is also responsible for the preparation and fair presentation of the financial statements in accordance with GAAP, or generally accepted accounting principles. Our responsibility as your auditors is to express opinions on the financial statements based on our audit. On page 2 of the presentation handout, I've highlighted the opinions. We've expressed what we refer to as unmodified opinions on your financial statements. It is the highest level of assurance that we can provide. It states in our opinion the financial statements referred to above present fairly in all material respects. That is the important part of that paragraph, is present fairly in all material respects. That is what you're looking for as a council, is that unmodified opinion. On page 3 of the presentation handout, we do have a paragraph there. It's not highlighted, but it does refer to the reporting required by government auditing standards. Your funding sources require that you have an audit performed in accordance with government auditing standards. So there's additional planning that goes along with that, testing and reporting, and I'll touch on that at the end. Page 4 of the presentation handout, we have the statement of net position. This is a government-wide financial statement. The government-wide financial statements are prepared on the full accrual basis of accounting. They are only prepared once a year for the audit report. The statement of net position that you see on page 4 of the presentation is a snapshot as of June 30th, 2017 of your assets, deferred outflows, liabilities, deferred inflows, and the difference between all of those is your net position or your equity. A couple of key performance indicators or financial ratios that I like to look at. One being the current ratio, your current assets divided by your current liabilities. And for both governmental activities and your business type activities, it was about 4. You can cover your current obligations about 4 times over with your current financial resources. At June 30, 2016, it was a little higher. They were closer to 5 or a little higher than 5 a year ago, but still 4 times over is healthy. You're in a good position. The other ratio that I like to look at this level is the unrestricted net position and compare that to your expenses, total expenses. For governmental activities, your unrestricted net position was $3.1 million. That represents approximately 11% of your annual expenses. For the business type activities, you were at about $10 million, and that's about 92% of your annual expenses for the business type activities. But as I said, the government-wide financial statements are prepared once a year for the audit. And a little behind on my slides here. And the level that you're used to seeing or more familiar with is the fund level financial statements. And that starts on page 5 of the presentation handout. We have the governmental funds financial statements here on pages 5 and 6 of the presentation. The governmental funds financial statements are prepared on the modified accrual basis of accounting, which means they have a current financial resources focus. So what you don't see on the balance sheet here are any capital assets, any long-term debt, the net pension liability, and so forth. Those long-term items aren't here. This is just this year's resources and this year's obligations as of June 30th. And again, I look to the operating fund, the general fund, the operating fund for the city. And specifically, I like to look at fund balance, the equity section. And I've highlighted 2 numbers here, the assigned and unassigned portions of your fund balance. That's what you have available for future expenditure. You do have portions of your total fund balance that are earmarked for specific purposes that you can't spend at will, but the assigned and unassigned portions of your fund balance you can spend as you see fit. And I compare that with your annual expenditures at the fund level. So on the modified accrual basis of accounting, compared to your annual expenditures plus your other financing uses or your transfers out to the other funds. So you take the collective unrestricted fund balance and compare that to your annual expenditures, and you've got about 30% of your annual expenditures available for future expenditure. It's about 27% last year. So a slight improvement over the unrestricted fund balance last year. The Government Finance Officers Association recommends maintaining a minimum fund balance in your general fund that is equal to 2 months of normal operations. So 2 out of 12 months is about 17%, and you're sitting at 30. I don't think that that's excessive. I think you're in sound financial condition. I think the 17% is a minimum recommendation, not a maximum. So I do think you're doing well.
Before we leave that slide, and this
Sure.
this is maybe not an audit question, but maybe a budget question for you, April, but it almost looks, from a revenue perspective, like 2016 was an outlier of some sort. What was there? Just trying to recall.
I think, if I'm not mistaken, wasn't. Go ahead.
Or Cheryl.
We get the funds, the road and park funds, right at the end of 15, and so that's kind of.
It just kind of skewed it. Okay, because otherwise, yeah. All right. Thank you.
You also had some insurance recoveries.
From the flood still, too.
Flood insurance. Yeah.
That's what I thought it was.
Thanks.
So on page 6 of the presentation handout, we have the statement of revenues, expenditures, and changes in fund balances, and actually kind of beat me to the punch here a little bit. But total revenues, $19.1 million. That is a decrease of about $1.8 million from the previous year, and $1.1 million was insurance recoveries from the flood in the prior year.
Yeah. Thank you. Yep.
The expenditures, just over $19 million. That was an increase, but it was less than 1% increase over the 2016 expenditures. The big shift on the expenditure side is the transfers out. Transfers, it's not highlighted, but transfers out for 2017 was $195,000. That was a decrease of $1.7 million from the previous year. So you transferred quite a bit out to the capital project funds last year. But you still added to your fund balance $233,000. And that is reflected in the bar graph there. I show the last 5 years of your general fund revenues, expenditures, and total fund balance. You've added to your fund balance in 4 of the past 5 years. 2014, you did spend a little bit of fund balance in that fiscal year.
Just to clarify, that addition to fund balance is part of the sales of property, correct?
Yeah, the other part is there was about 120 prepaid.
Oh, that's right. Can you explain to them what that is, just so they know? It's assigned, so
Yeah,
are committed.
it's the real estate one or the prepaid?
Both. Well, the real estate, where they know what the real estate is, but what's the prepaids?
The prepaids are, we prepaid for expenses that are going to be in 18. So they're considered an asset because we haven't really spent that money yet. It'll show as an expense in the next fiscal year.
What's an example of that? Insurance, so you'll pay your insurance like in May for the next year, so we count that as a prepaid.
Probably, that's a good point. Yeah. Just a point of clarification, because if we're going to engage you in questions, you should be near a mic just because we're being televised. No one at home can hear your wonderful and intelligent answers.
Sorry.
All right, so I have a couple of pie charts that detail the composition of your general fund revenues and expenditures. The first one is on revenue. Of course, property taxes, largest source of revenue at 52%. It was 47% in 2016. That's followed by intergovernmental at 18%. That would be primarily your state shared revenues, your sales tax. 18%. It was 17% in 2016. The big change here is under other, which again, insurance proceeds. They were 10% last year and down to 3% in 2017. But it all has to add up to 100, so we have an even pie here. The expenditure pie chart for 2017, public safety at 59%. It was 48% in 2016. That's followed by general government at 23%. That was at 27% in the previous year. And then other, again, transfers out. It's down to 2%. It was 9% in 2016.
So public safety has an 11-point gain for its share of the pie, essentially?
Yeah, yep. But again, your transfers out were pretty substantial in 2016, so it does have to add up to 100. You do see some shifting. And,
right.
Yes.
Right. Thank you.
And then I've got a line graph here of the last 5 years. This is your unrestricted fund balance compared to your expenditures and other financing uses. And again, you've maintained a healthy fund balance in the general fund over the past 5 years, ranging between 25 and 30% of your annual expenditures. And I've included the proprietary funds financial statements, the statement of net position, and the statement of revenues, expenses, and changes in net position to highlight the water and sewer fund. I apologize, your handouts don't have it highlighted. I noticed that when I was writing up my notes, and I didn't have time to reprint them. But the statement of net position, again, is a snapshot as of June 30th, 2017. The total column that you see on the right-hand side is exactly the same information that is included in the business type activities on the government-wide financial statements, because these are also full accrual. But there's more detail here. It's broken down by fund, and so you see the water and sewer fund and the auto parking fund. But I'd like to talk about the unrestricted net position, the second number from the bottom in the left-hand column. The unrestricted net position for the water and sewer fund is just about $8 million. And I compare that with your operating expenses less depreciation. Depreciation is a non-cash expense, so I subtract that out when I look at this ratio, and that unrestricted net position represents approximately 111% of your operating expenses, less depreciation. A little lower than it was in 2016. It was at 113% in 2016. But the total net position did improve. On page 11, statement of revenues, expenses, and changes in net position for the water and sewer fund. Total operating revenues were just over $10 million. Total operating expenses about $9.5 million. So you added to your net position $248,000 approximately after you include the non-operating revenues and expenses. So total net position did improve, even though the percentage compared to your unrestricted percentage compared to your operating expenses did decrease a little bit. In the previous year, your net position in the water and sewer fund actually decreased $453,000. So again, positive results, I think, for the water and sewer fund. The bar graph on the next page is the last 5 years of your total revenue, total expenses, and total net position for the water and sewer fund. Gives you a visual perspective. Again, your revenues did exceed your expenses, and so you improved your net position, your total net position for 2017. There are a couple of graphs that inadvertently didn't make the handout that I've got included on the slideshow here. This bar graph shows you the composition of your total net position, the breakdown between unrestricted and the amount invested in capital. They are separated. You can't spend your system, so that's not really available for use, but it's very important to the fund, so we have it there. The brownish red color part of the bar is your unrestricted net position. That's what you have available for future use for operations. And then this line graph shows you the unrestricted net position as a percentage of the operating expenses. As I said, I do subtract out depreciation for this calculation, and you can see that you're at that 111%.
Could you explain the dip from 14 to 15?
Lawsuits.
Lawsuits,
Yeah,
settlement
yeah.
of lawsuits. Yeah.
Okay, thank you.
All right. We also, as I mentioned earlier, we did perform the audit in accordance with government auditing standards, so we have a report on internal control relative to that. And this is our report of findings and recommendations. This is on pages 13 through 15 of your presentation handout. A couple of material journal entries were proposed as part of the audit process, one being the leases, the recording of the leases for this fiscal year. And it's really in the initial year of that lease requires some journal entries be recorded in the governmental funds. The other issue we had was on unclaimed property, and that's old outstanding checks that haven't been cashed. There's a review that should be done annually, and you should escheat those outstanding checks to the unclaimed property division of the Department of Treasury. So a couple of relatively minor issues there. On page 16 of the presentation handout, I've included this page out of the notes to the financial statements. This is on new accounting standards that are upcoming, something to look forward to here. There's a handful that will be effective or have some impact for the city of Ferndale. Probably the most significant one out of these four is the OPEB standard, the GASB Statement 75 on the accounting and financial reporting for other post-employment benefits. Currently, the city recognizes an unfunded annual required contribution of about $6.8 million on the government-wide financial statements. The unfunded actuarially accrued liability sits at about $32 million. So with this GASB Statement 75, you'll need to recognize that additional $25 million approximately. You'll have to get a new valuation when you determine what the liability should be that's recorded on the government-wide statements, but it's looking like it'll be in the neighborhood of $25 million. It's a change in accounting standards. The benefits haven't changed, but we have to recognize it now a little differently than it was in the past. And as a result of that will bring your your unrestricted governmental activities net position negative. Not to be the bearer of bad news, but that's likely to happen. So
Us and every other community in
yes,
Michigan.
that is true. Yes, everyone that offers OPEB is probably
Yep.
going to be in the same boat. So it will not affect your governmental funds. So you pay as you go. Currently, you'll still recognize that outflow when you make that payment, but that full liability is not recognized in the governmental funds. It's only recognized in the full accrual funds.
But we're in a much better position with OPEB than a lot of other communities.
Yes, we are.
So I know I went through that very quickly, but I'd be happy to answer any questions you may have.
Anyone have questions? Nope. We appreciate it. It's basically good news, I think.
It is.
And we appreciate your efforts.
Thank you.
All right. Thank you.
Thanks, Aaron.
Thanks.
That's our only agenda item for this meeting, and so this meeting is adjourned. But we'll reconvene at 7 o'clock.